Hey, do you want to tell them what a great blog post there was over the weekend?
Sure.
Okay.
Let's do it right after I do this stuff.
All right.
All right. Today is Monday, September 17th, 2012. This is Michael from CFRN, and if you have not taken a free trial with us, go to www.cfrn.net/apply and take the free trial. If you have taken the free trial with us, well then, you need to get on board if you're not already. Yeah. The sound effects. The studio audience. All right. Now, let me get on to something very important here. Very quickly. Let me jump over here and do this. Hang on. There we go. Look at this awesome blog post. How to trade Emini price channels. Everyone should go to CFRN.net, Emini news blog. All right. That's what I have here. I just click right on this CFRN logo right over here on my toolbar, my CFRN toolbar that Dwayne just described to everyone. And it brings me right to the blog. How to trade ascending and descending and even flat channels. You see, if you scroll down, there's a great description of all the different types of channels, even pictures. Look at that. Look at that. I can click there to share if I want to. See that? I can click there to share. Amazing. Go check it out. CFRN.net/Emini news blog. All right. All right. Let's see. For the results this morning, we only took a few trades. We took an NQ trade. We got a break even on. We took a gold trade. We got +1 tick. And we took a crude trade. We are down 7 ticks on the crude trade. That was all that I did this morning. Dwayne took a trade, and I'll show you where. You see, he was trading a channel this morning, just like he put in his blog post. You see that? He put his money where his mouth was, or where his typing was. He had shorted a pullback. This was the channel line that he was looking at this morning, and he shorted a pullback right over here to the channel line. Okay? That's where he took a short this morning, and he's been in it since then. You can see how it's just tightened right up in here. It did hit his 2-point profit target had he just been going for 2 points, but I think he was looking a little further down than 2. I was saying I wasn't going to take a trade on the ES unless it dropped down below this level right here. And it still hasn't dropped down below that level. So I still haven't taken a trade on the ES. And that's pretty much where it stands for me. But as far as the trading the channel stuff goes, Dwayne sold the top of the channel right over here. It drew down probably 3 or 4 ticks on him, and it went +8 ticks. Went back to break even, +8 ticks again. And now it's +1 point or so right now, I believe. It's +4 ticks sitting on that. At some point, he's going to have to take that trade off. Remember, if you hold between 415 and 430 or 435, you have overnight margins. All right. Let me slide this over here. That wasn't so much for Dwayne. That was for everyone. On the NQ, let me go over this quickly. Right here on the NQ, you see. This was the one trade that I took. We had a bearish cross, pull back up, tested the BBC with a down close. I entered short right here. It got down to the MA1 right here, which is the window of opportunity. And I moved my stop to break even, and I got out at break even on that trade. All right. It was having trouble doing anything in here. That's why I figured the window of opportunity was going to hold on that. Oh, look, I actually took 2 NQ trades. Sorry, I thought I only took 1, but I took 2 apparently. But I got to break even on both of them. I know I didn't make any green on it. This one was the same thing. It went up to the window of opportunity. I moved my stop to break even. It took me out at break even, and then it moved up. But just for the record, the trade setup is actually when you get a bullish or bearish cross of the BBC, which is the green line. Price moves down, and then it moves back up, looking for some area of resistance in this case because it was a cross below. Looking for an area of resistance, it found that resistance, and then it closed back in the direction of the cross. When that happens, down here between the green line and the cycle portion, you want to have divergence. What that divergence is showing you is that there's a difference in the short-term movement and the longer-term direction. So the short-term movement is likely to stop at Once it finds resistance, it's likely to stop and turn back in the longer term direction. That's exactly what happened right there. That's what happened here too, but I stopped out at break even. Over here, it happened as well, but it would have gone through my stop had I not gotten out of break even on this one. It would have gone through my stop before it moved in this direction. You can see a couple other instances here that I had highlighted where it gave a cross, tested the BBC with an up close, but the markets were just so flat in here. I wasn't going to take any long trades on the NQ when the ES and the YM were going right into weekly trading zones. You can see they still are. So I didn't do anything there. I didn't do anything on the YM this morning. I really didn't even look at it other than to say that it's got the same trend line the ES does. Gold. I took a trade on gold this morning, but there were more opportunities. There were some nice opportunities on gold. I don't know which one I took. I think I took this one right over here. It was pretty early on. I took a long trade and I ended up getting one tick on it. After it had closed up above the MA1, I had moved my stop up to plus a tick, and it went up and it stopped me out at plus a tick. All right, you can see it continued up after that, but we had the bullish cross, tested the BBC over here. This was pre-market, then it tested it again right here with a bullish divergence, and I got long. Then we had a bearish cross with a test right here, and a little tiny bit of bearish divergence down here, right there. Okay, it had more divergence over here, but it never pulled back. It did pull back here, but the cycle was going up, so we didn't take that. We missed this opportunity in here where everything looked really good. This would be, if we were going to grade the trades, like with an A, B, or C, this would be an A grade trade because everything stayed blue on the pullback and on the up close. You know, the cycle portion was still blue. The MA1 was still blue. Everything was blue on the whole thing. Unfortunately, we missed that trade. There was another opportunity right here, the same thing. Another one right here that didn't go anywhere. After that didn't go anywhere, I drew a trend line down this because that's what we currently had. And I was thinking that it was going to move down. Unless it closed on the other side of it, I was thinking it was just going to follow this trend line down. Obviously, it closed on the other side of it, and it gave about 6 or 8 ticks, and then it moved down. There were some more opportunities in here that I had missed this morning. But you can see right over here, it flattened right out. And that's it. That's all we had on the gold. We only had that one trade that we took on the gold. All right. Now on the crude oil, crude's been up and down quite a bit. And with this stuff that Dwayne had mentioned earlier about the Straits of Hormuz, we're going to see some prices above $100 a barrel here. I would think probably relatively soon. I would think pretty easily we're going to see stuff above $100 a barrel. As much as I hate to see that, especially living in New England and going into the winter months. We'll probably have $5 heating oil this winter. Anyway, here's a bearish cross with pullback up test to the BBC, and over here you can see we had the bearish divergence right there. All right, for an opportunity to get short. This was a trade that I did take right here. I got a break even on. Had a pullback test to the BBC with a down close. And this is the crude oil on a 4-tick range. All right. You can see it flattened out as well in there. I didn't take any more trades in there. This is the one that I took over here that I lost on. But this one right here had bullish divergence right here. I missed this trade. It had bullish cross, bullish divergence, tested the BBC with an up close. All right. Now, what you guys should be taking away from this is that we're doing the same exact thing on all the 4-tick range charts. We use the same indicators, the same everything, doing the same setup, same everything across all the charts, and having similar results, really. You have to actually place the trades. When I'm doing 5 markets at once and answering questions from a bunch of people, I miss a bunch of trades. But if you were to focus on any one of these markets, just really focus on it, then you should be doing well. You should be taking most of these trades. But you can see I had the bullish cross. It tested the BBC with the up close, and we had bullish divergence. A follow-up one right here. And, this is crude oil. It's $10 a tick. So from 99.28 right here up to 99.39, that's $110 right there in that little move. And, $110 a contract. So if you have 10 contracts on, well, you get $1,100 right there. And it happens over and over and over again. All right. people often ask what my risk is on these things. My risk is always the same across all these charts. Okay, it's 8 ticks. 8 ticks across all the charts. And that's pretty much it, guys. We had a really flat day today. Not a lot of trading, unfortunately, but you know, it is what it is. And with that, I am going to stop the recording. If anybody has any questions, you can email us, support@cfrn.net, and we'll get back to you as quickly as possible. All right. If you have any problems with your platform, or if you want to download the platform, if you're taking the free trial, call 1-866-928-3310. That's 866-928-3310. And if they can't help you out, then get a hold of us, and we will certainly help you out. All right. That's it.